Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we are going through what is usually a new stock. This time, not so new. I used to own this stock, ended up selling out of it, and now I have a third. I bought back in a very, very small position into this name because I just recently took a look and it was the cheapest that the stock has been trading over the past decade. Now, obviously, if you guys saw the title or the thumbnail, I'm talking of PayPal. Today, we are going to go through a presentation of PayPal stock and talk to you guys about why I've started this position. Okay. It's okay. One, whenever you're looking at the stock price, yes, we have been cheaper than today. However, there is a massive buyback strategy that's going on, which has allowed the multiple of this stock, especially on an enterprise value, which I'll talk about, to be some of the cheapest prices we've ever seen. I mean, truly, this is a disgustingly cheap company that the company is treating as if they are completely going out of business, but yet each and every quarter they grow more and more with an accelerated guidance that will put us in faster growth rates into 2026. Not only that, they have some pretty aggressive new products that we're also going to talk about into 2026 as well. Things like this should get someone like Roy very excited. But he already knows everything I'm going to talk about and more. But anyway, let's get into it. So, immediately, if you guys don't know PayPal, if you think that they're a dying business, take a look at their total revenue and then also take a look at their diluted EPS. Let me just hide revenue real quick. This is not a dying business. This is the opposite of a dying business. They make more money over time. Let me shrink this. This is way too big. I'll do one extra year just for this. This is a growing business, okay? They make more EPS each quarter. They are making more revenue. That revenue is still growing in single digits, but they want to accelerate that, especially on P2P, to even higher levels, okay? Now, there are red signs. If we look out, you can see that the gross margins have decreased. There is compression in the payment space, okay? And it looks like it's going to be even more going forward. Now, you know, there's some things I could immediately point to. This one's pretty cool. They're not avoiding stable coins. And in fact, not only are they not avoiding stable coins, they're actually becoming one of the fastest and not only fastest growing, but potentially looking to take one of the top spots in stable coins in general. As you can see, just in the past couple months from September 7th up to now, the stablecoin market cap, meaning the total amount of outstanding dollars sitting on PayPal USD, which is their own stablecoin, built by Paxos, but you know, offered via PayPal and for their merchants and customers. That was at 1.1 billion in September. Now 3.4 billion. That's more than a triple in 2 months. So there's big efforts to modernize. They've had large agentic. Why does that sound weird? Practices. They have been buying into, oh, sorry. One sec. Okay. No spamming. BM&R crap. That's so funny. I'm still involved in BM&R. Still a big fan. Agentic commerce. There we go. Let's get back to the slides though. Okay. So the main reason what bought me back in is a couple things. The buyback efforts that we've ended up seeing now sitting at 9.8% of the entire business. 9.8%. So each year that goes by, essentially this company is being bought back. If we go to total outstanding shares, we can see, especially even if we look in the last 3 years, for example, the total outstanding shares on this business has gone from 1.15 billion all the way down to 941 million total outstanding shares. Like they are actively buying back this company. If the years go on, they are just going to completely take this business private. Now, if you are a shareholder, this is actually a really good thing, right? You can artificially inflate the total ownership of this business that you have in the company if the more amount of the total float continues to shrink over time. Okay. So these shares are not being purchased to then go private. They are just being bought and burned. Okay. What are with how do I, all right. BMNR is a treasury company that buys Ethereum. There's not a single scam or anything attached. They literally buy Ethereum from the guy that is 25 or 26 years in Wall Street with a perfect record so far. Okay. That said, let's take a look then at. Oh, wait. No, I wanted to take a look at market cap and total enterprise value. And we'll take away. Oh, dang. Okay. Another thing to look at for this business right now is total enterprise value. This is how many, or like the size of this company plus debt minus cash. Okay. The reason being is that market cap you want to be lower. You don't want to pay a high price for a company that you like. However, if they have a lot of cash, you're not necessarily buying that part of the business. They already have lots of cash. So this is a way to sort of look at the business and say, okay, well, if I'm buying back X percentage of the company and they just have cash, well, that's a really good thing. So, yeah, they are much, much cheaper whenever you consider them in their cash than anything else. Yes, we're looking at PayPal. Okay. So it's even prudent to look at this company whenever you look at, let's say, EV to sales, for example. This is enterprise value. So you're including their cash and then looking at it versus how much total revenue that they're actually doing. If we then end up sorting by, where the lowest place that they've been in the last couple of years, today is the day. Like literally, the close today is the cheapest price you could buy this company in the last many years. Now, I'm sure there'll be blips where, never mind, there isn't. I mean, we can look back all the way to, nope. We're looking out over a decade, more than a decade right now. Today, on an EV to sales is the cheapest time in history. Let's keep on this decade and let's look at EV to free cash flow. Okay, well, that's not going to look good because they had a blip there, possibly not being cash flow positive. So let's look a little bit more recent, and then we'll also bottom that out, just similar line. It doesn't look to line up with the cheapest price we've seen cheaper in July of 2024, roughly in this area. However, we are still very, very close to some of the cheapest prices that we've seen for PayPal. Like we're heading right down. This is just on free cash flow, okay, of some of the cheapest prices that we've seen. It's just crazy to me. Look at this PE ratio. We're at a 12.7 PE ratio. Last time we touched anywhere near this, we just completely bounced off the bottom. Okay, bouncing it head much higher from there. Let's go ahead and take a look at forward PE really quick. Forward PE, 8 times. Oh, wait, sorry. No. That was as of, why does it say that? Oh, that's 2028. Sorry. I was going to say that's not right. Forward PE, we're at 11 times right now. 11. Let's see what else. Gross profit might be an interesting one from an EV perspective, just because gross profit is not like there is some margin compression there. I wonder if there's been a cheaper time in history for gross profit. 3.37. We look out over the decade. Yeah, it's literally today. Today's the cheapest day you can buy PayPal from a gross EV to gross profit perspective. Like there is something here, man. There's a moment where you need to look at these businesses and say, hey, I'm buying back a company that's returning like real shareholder value to their shareholders at 11.5%. That means debt pay down, dividends, and buybacks. Okay. And by the way, they just issued a dividend. Roughly, I think it was 0.2% per quarter. So 0.8%, almost 1% dividend per year. But that's on top of their existing buyback plan. They're just saying, okay, if the market doesn't like us, whatever, we'll just return a ton of money back to shareholders and buy back the stock while it's cheap. And I'm here for it. There are some concerns about payments. I'm not neglecting that. Like there is. However, a lot of the new I actually didn't want this. Let's go back real quick. A lot of the big changes in payments, they are front running. Agentic commerce, buy now, pay later, exploding in buy now, pay later. They just announced something called PayPal Plus, which is essentially saying, hey, if you do direct deposit with us, if you have a debit card with us, if you have multiple products with us, each and every time that you bring money to us and also pay out via the PayPal checkout, we are going to give you a ton of cash back, sometimes up to 5% cash back if you're a direct deposit user and you're using a PayPal checkout with their debit card. Crazy returns. So we have not seen how the market's going to react to that. Is the market going to essentially say, hey, there's massive finance communities online that are always hunting for the highest cashbacks, the highest returns, stuff like this. And they've also announced, Diego Scotti on the most recent Fireside Chat said, we're going to work with other merchants that have their own rewards programs that you can use directly through PayPal. So if you want to go as a direct depositing, PayPal checkout, whatever, debit card, everything, you bring up your cash back there, and then you want to go to Starbucks and pay via tap to pay via NFC purchases, which, by the way, they just rolled out in Germany. They already have 6 million people using it. Okay, 6 million. During that time, they'll also say, hey, we'll also allow you to connect your pay or Starbucks rewards so you can double dip. We'll pay you, they'll pay you, and it's all going to go back to your PayPal wallet. There's going to be some growth here, or at least I feel like there's going to be some growth here. I can't guarantee anything, but whenever you're talking about a company that has brand new management, new product lines that are just getting started, just like their ads platform, buy now, pay later, these sort of things. Venmo is doing very well. Venmo's revenue is up 20% year over year. They've been making massive pushes into Venmo. All of these things, and you're going to offer me this stock at the cheapest price in history. To me, that seems like a deal, right? There was another thing too that I wanted to cover. By the way, buy now, pay later just rolled out into Canada. It does increase TPV. It does increase take rate. They charge more for buy now, pay later. And unlike many of the other merchants, they already have a massive, 35 million merchants that they can roll this out to. So whenever they roll it out to new countries, like they just did in Canada, that's an immediate uptake. That's immediate returns. And then they sell those buy now, pay later portfolios. Like they don't even keep a lot of the risk. They end up selling it to companies like KKR. PSP is their payment service provider. It's Braintree. This ended up, decreasing like crazy. This was a massive hit to their revenue growth over time. Okay, you can see from Q2 of 2024 down to Q1 as they've started to price according to the value that they believe that they're bringing to the market. They're no longer charging, a massive premium. But in Q2, this ended up turning around. It ended up going flat. And by the way, this was not out of some coincidence. They called that. They said it was going to happen in the back half of 2024. Then we started to see growth in Q3, and they expect a lot more growth into Q4 for PSP, which is only going to re-accelerate their take rate. There must be something here. PayPal World. Why didn't we talk about PayPal World? By the way, you're also allowed to buy crypto on PayPal, just so we're aware. PayPal World is their ability to connect multiple different payment providers and send money between PayPal to, WeChat or Pix in Brazil or some of these things, right? So there's many of these different solutions. Mercado Pago's on there. You have WeChat. There's a few of these names with massive tens of millions, hundreds of millions of users. And now they're sort of connecting one large payment infrastructure to send payments between all of them. I don't know. Is that worth, is this the worst that we've seen this company in history? Is that what we're seeing? Venmo's growing as a percentage of total growth here. They said branded checkout was not growing as fast as they wanted it to, but that they do see themselves re-accelerating that going forward. That the total focus is not going to be on branded checkout, but they are not going to lose sight of what has gotten them to where we are. They said in 2026, the entire PayPal app is going to be completely revamped with, many new products. Pretty crazy. Dookie, how you liking that wrench? There was just a couple of bots spamming earlier, so I needed. Does Tanner know I'm a mod? Who do you think modded you? I'm the only one that can give you a mod. I trust you. With great power comes great responsibility. Okay. Let's see. And the ad business will be high margin. That started this quarter. I've been seeing the ads on PayPal when I use it. Oh, 100%, Kendall. This is very true. If you guys go on PayPal right now, you'll see the ads. They're bought by big companies, very real businesses. They have essentially 400 plus million monthly active users, let alone the 800 million vaulted total accounts. There's going to be massive brands that want exposure to those customers, and customers that, by the way, literally have their wallet ready. Like that's what PayPal does. So the conversion's high, and by the way, PayPal only charges for a conversion, not an ad impression. So they can charge a ton, and there's no risk to the actual merchant for doing those ads unless you're going to see a real return. So imagine the difference in the way that you could charge for ads, like, oh, per 1,000 views, I can charge this much, and that's how much I can bid because, there's a likelihood that 2% will convert, yada, yada, yada. So maybe I can put this amount of X dollars towards ad spend. Here, you are only paying for straight conversion. So if you say, okay, well, 30% of my, spend can go towards sales and marketing, that's what we'll keep aside for PayPal. And they could probably charge, 30% take rates on their ad platforms that also go through PayPal checkout. Kind of cool. I am very fascinated by how much the market is hating payments right now, especially the ones that I think are doing it well. They continue to grow. They continue to, add on more active customers. If we take a look here in their segments and KPIs on Fiscal AI, we can see total accounts. By the way, this is their dying business. A lot of this growth is from the pandemic, so we're no longer in this phase, okay? But if I cut this back a little bit, and let me just extend that a little more. There was a time period where we got to about 435 million merchants or customers, and then that started to fall down to 426. Dark times, like this was a bad age to be a PayPal fan. Then that started to turn around. Alex Chris got involved, and then we started adding, and now we're back up and up and up. I don't know. I'm a big fan. Okay, wait. Let's number of transactions. Let's just change to a line graph, and then we'll also put that on its own thing. I freaking hate this color though. So you can change the color on Fiscal AI to change the colors, but I just have an easier way where I just toggle one and then the other, and then I untoggle that one, and then it changes to the next color. Which I'm still not a fan of the purple on blue, but I'm over it. If we take a look, and I can move this just to here, the amount of transactions on the platform, and this is, by the way, we have not seen Q4. So whenever you're looking at, PayPal, you have to realize that holiday spend is their big deal here. Okay. And it also means that quarter over quarter growth is not nearly as important as year over year growth because it's the same seasons, right? It's very important that you're judging this company on year over year growth and year over year margins. But the amount of transactions are doing very well. In the broad scheme of things, there has been some fluctuation in total transactions, but then you look at total TPV, and then we just end up continuously growing over time. You can see this here as well. If I can toggle this right here on Fiscal AI, percent change. I can go back down to total payment volume and then total payment volume percent change. Remember, it's not the transactions that they get paid on, it's the total dollar amount. They get a percentage of each transaction. So it's the dollar amount that is dependent now, or is the main factor. Year over year growth in total payment volume is 8%. Okay. Hopefully that continues to accelerate. That's the hope. But that's why we look at what they're doing, right? We look at the let's see what else we should look at. Like what do you guys want to see from PayPal that we can take a look at? Take rate is really important. This is why the company is not doing well. Take rate over time has just been going down. Now, this is a little bit of chart crime. It definitely, like if you were to zoom out, it wouldn't look this bad. This is a difference of 0.2%. Okay. That said, it's still not good, and it's only going to increase in this direction. However, they continue to beat on revenue, so that should be the only thing that matters. People worry about take rate because they want to know, hey, are they going to beat or miss on revenue? They keep doing well. I can't control the price of PayPal, but I think, and this is sort of the theory that I'm going off right now. They just announced a dividend. Okay, as that starts to get priced in, and that might be as high as 3 quarters to make sure that they have 4 quarters of dividends, 1 year of paying out. That there will be a lot of funds with objectives that are looking to buy into dividend names, especially if PayPal can over time increase that dividend. That's only going to put it into more and more value investor, sites to pick up some shares of a company that's growing, tech forward, and buying back shares like crazy. Has a shareholder yield of 11.5%. You guys find me the best companies in the world and tell me if you can find that. Tanner, are you reading? I'm reading the charts. I'm not reading the comments as much, but I will now. Let's see. Ad revenue is so unbelievably small right now. There won't be any other line, and one, they don't break it out, but they do look at other value-added services. So we can look at value-added services and look at percent growth here. And that is doing pretty well. We're no longer in the early stages of 2024 where this was single-digit growth rates. But yeah, I wonder how value-added services has done on a longer time frame. So nearly 15% growth on value-added services. We are at the high, like $895 million this quarter. But it's transaction-based revenue That's the important part. And it'll be important to see Q4 and get the full year. Remember, this is a cyclical business. They just did a deal with OpenAI. You know that? We can go in here and see these slides. I think they talked about the OpenAI deal in here. Did they not? Agentic ads. Maybe they didn't. We can look at it either way. Maybe they didn't show it off in their presentation, but it was announced the exact same day as the presentation. That's the only reason why I thought maybe they would. No, maybe it was the presentation was built before they knew that it was completely confirmed. Let's go ahead and go to their blog really quick. Okay, and PayPal. So you guys can follow on PayPal's newsroom here all the things that they're launching. They're launching PayPal Plus, the big loyalty program that we talked about in the UK. They launched Venmo Stash, which is essentially very similar, but giving people rewards points and rewarding people for paying with Venmo. PayPal Buy Now Pay Later launches in Canada. They showed off some of their agentic tools with NVIDIA during NVIDIA's GTC. Agentic commerce services with PayPal. They did OpenAI, Venmo with Built for some mortgage payments, rent and mortgage payments, I should say. But, is there a video here? Am I going to get, wait, give me one sec. I just want to see if there's music. There is definitely music. We can just watch it muted. How about that? Okay. Help me buy running shoes for Maya, size 7.5. She likes bold colors and city runs. Cost of about $120. You then end up bringing up this store and then checking out directly with PayPal. PayPal Wallet is coming soon to ChatGPT users. Like, this is not an old school company. They're literally working with the most forward businesses in the world. Purchase protection, seller protection, which is honestly why people use PayPal today, are those types of things. Like, if you work with a merchant and maybe you've never worked with them before, and you're like, well, I don't know if I'm actually going to get my product delivered whenever I click buy on this product. If you don't get what you paid for, just go to PayPal and say, hey, it didn't arrive. And they're like, all right, cool. Customer always wins. And they send your money back. See, this is what I feared from Dookie. Someone say something stupid so I can use my powers. Don't incentivize someone saying bad things. I can get banned for that. The problem is institutions are not buying PayPal, so no matter how good the company is, big money's not investing in them. Literally, replace the word PayPal with SoFi, and that was the argument years ago. They're not buying until they are, okay? And there is massive, huge swaths of money that want to invest in companies that are not purely growth or growth focused, and that there are. Am I focused? It looks a little weird. But this was the SoFi problem before. They will with dividends. Honestly, I completely agree. I don't want to buy in if the institutions are buying in. I don't think that's necessarily a bad thing, but if I can front run them, that's what I'm looking to do. Okay. Let's see. Tanner, is it possible that market cap keeps declining even with share buybacks? Yes. Making a growing ownership in the company not worth it. That has been what has been historically happening. But I just don't think that can go on forever. I think eventually Like at some point, does a large company like even potentially Apple just say, "Hey, you know what? With $80 billion, we could scoop up this entire business," and Apple Pay turns into an absolute giant. Something along those lines. So it can keep falling, but I don't think that that is going to be the case. I mean, we might touch 50s, but just remember, this is the cheapest the company has ever been. And then, especially whenever you look at EV, enterprise value of this company, we are super cheap. They have $8 billion in cash. Look at AutoZone is the greatest buyback story in history. I think they bought back in total like 98+% of their total outstanding shares, and the stock has just skyrocketed because if no one is going to say, "Hey, you know what? AutoZone's not a company that we like who knows? Maybe Tesla just eats the whole market, or I don't know what the whole story behind AutoZone is. I can't say I've researched it very much, but I do know, and people that do follow the buyback story always look to AutoZone as being that company of like, oh wow, you can just keep buying back. Um, let's see if I can find a thing on that really quick for AutoZone. I mean, honestly, my chart doesn't go back far enough, but um, oh wait, nope, nah, never mind. It does. It goes back far enough. If we look back to 2005 on AutoZone, this is their total outstanding shares went from 76 million total outstanding shares down to 16 million. And so if we couple on top of that, what happened to the stock price, that the company has done well buying back their own shares. That's essentially it. But yeah, they just said, "Hey, if no one's going to buy us, we'll buy us." And that's what PayPal's doing. Um, yeah, Matt Money tells their profits have 6x, but their buybacks have reduced share count by 90%, so the stock has risen approximately 6,000%. That's a great way to put it. Okay. Consumers always right. Even if you send the money, they receive it. They can always refund. So this has also been something that they've been trying to get better with, especially in the advent of like AI and stuff. They also do package tracking and stuff. They are trying to be a little bit more fair with merchants. A lot of people have experiences through COVID and still associating that with the new management of PayPal. Um, but they are trying to get much better with, the consumer's not always right. There is definitely theft on both sides. Dang, what did I miss? Yeah, sorry, it was a little bit earlier. This might be the new time of the show, 6:30 to 8 or something like that. That way I can get out and actually enjoy dinner at a regular time before the next shows that I usually have. um okay, let's see what other questions you guys had. How would shareholders be rewarded if they went private? Well, they have to buy your shares back. They can't go private whenever you're holding public shares. But if they continue to buy back, and the market is allowing them to buy back shares at $62, then they're going to actively buy it back. But if there's a bunch of people who say, "Hey, I don't want to sell my shares," there's always a market for someone to say, "Well, I'll sell if it gets to 70. I'll sell if it gets to 80. I'll sell if it gets to 90." Well, then that's how the stock runs up. If you run out of sellers and there's only buyers, even if that buyer is only PayPal, the stock price will go up, right? Um, Tanner, how low do you think PayPal is going to go? I mean, not to sound a little bit weird with it, but like uh 62.81. Like that's when I bought in. So I'm not saying that it can't go lower, but it's the lowest it's been. It can obviously go. I mean, it could go to 30. I've got no clue what's going to happen into the future. But um I'm betting with my dollars that we are nearing the bottom because the business is doing fine, you know? What about AI fears layoffs, therefore decreasing revenue? Then don't invest in the stock market at all. The entire economy is running on what PayPal is running on. If there's not money flowing from consumers' hands into businesses, that means advertising dollars for Meta and Google and Amazon are not working. Amazon's not getting purchases. The logistics companies are not delivering as many packages. Planes are not in the air. Like, legitimately, the interesting part about payments is like, it is the first line, but it's also the last line of like how good the economy is doing. And that's going to flow out to the rest of the other businesses that you're holding. Another thing is inflation. If inflation starts to tick back up and there's actually a problem there, that's not a problem to PayPal. Okay. Payment companies are inherently protected against inflation because if people have, you know, 2x more dollars to spend, PayPal charges a percentage of the amount of dollars that flow through their system. So Visa, MasterCard, all of these companies are a little bit protected from this, that if inflation goes up, their total payment volume goes up, they stay protected. That cannot be said the same for other businesses. Bruh, Berkshire Hathaway bought Google. I know. Just in case anyone missed this story today, really quick, Warren Buffett's Berkshire Hathaway has almost a $5 billion stake in Google now. Talk about confidence in the AI trade and that he's not worried about, ChatGPT or the CapEx spend that's happening. You have Brad Gerstner and Warren Buffett buying Google in the same quarter. How does that happen? When is the last time that Cotu Management and Warren Buffett have ever overlapped on the positions that they're taking share in? That's why Google went up in after hours, yes. Yeah. Isn't that crazy? That's a real story. That, like, if you guys saw that, it was no joke. Here is his buys and or largest buys and sells. But like, even look, like Chubb, for example, it was 0.27% of the Berkshire Hathaway portfolio. Google, which was number one, was 1.6%. Like, he pushed the chips for Google. In Q3, by the way, I think Bill Ackman trimmed his position by 10%, and they went out and bought 17.8 million shares. Crazy. They did sell Apple to buy Google, and it's, that's a trade that I second. I've got no business buying. Oh, by the way, those little Apple pouches, if you guys know what I'm talking about, the iPhone Pocket, Bloomberg today reported that they are sold out. I don't know what is wrong with the consumer. You guys have lost your minds. It's literally designed from a piece of cloth that they're charging $230 from, and they sold it out. I mean, I don't know. Maybe they manufactured 5 of them. But that's insanity to me. Here, let me find that. Oh, gee. Yeah. Apple's $230 cloth pouch for their iPhone is already sold out per Bloomberg. Sad day. People supposedly are buying them as well and just not opening them. They're buying them and essentially is going to be a collector piece for Apple later on, which could also be a big thing. Just a lot of people that are saying, hey, you know what? This is going to appreciate in value just in Apple's, history, which is crazy. Um, okay. Tanner, I'm Paul, the SoFi guy. Um, my pH got stolen and hacked. What is pH? Can we start a GoFundMe? Maddie, I don't need a GoFundMe. I just need your. I need your dad to give me the okay. What is it called? Like, I need approval, so then we can get married. Tanner, any opinions on Nebius after the Google announcement? Do you mean the 40 billion Texas data center announcement? If there was a direct Google Nebius announcement, I did not see it. I didn't see that was linked to Nebius per se. Or if you're talking about just straight up, Warren Buffett buying into a larger AI name, then yeah. Either way, I'm very positive on Nebius right now, and I took a stake in the business yesterday. Tanner, you think we see $100 in Nebius again? Yeah, I didn't buy it to see $100. I think we see $300 one day. Like, I really think that every GPU that's being made right now is being immediately sold and trying to be set up right now. I do not believe the FUD from institutions at all. I think the AI train is in full force, and actually, I still think we're probably early. NVIDIA will be a $10 trillion business. That's my belief. I'm seeing nothing to the contrary. I'm not seeing a new way to for the models to improve without GPUs. My cat is trying to get out right now, just sitting at the door waiting. So I'm going to let him out. 1 second. Just patiently sitting at the door. What a guy. Okay. I bought both Nebius and CorvWeave. I couldn't decide. They hacked my brokerage. Man, you need a password manager or a VPN or something. That's terrible, Paul. Sorry to hear that. How much were you guys paid to pump or by Vlad to pump all these stocks? By Vlad. Do you think Vlad is happy that I talk about SoFi every day? I don't know. Like, what is with? I can't believe all of these scam concerns that you guys have. Do you think that they're just letting me talk about PayPal and SoFi, like just big payments and brokerage competitors and other crypto names? Just think for a second with your freaking brain. I talk about SoFi 1,000 times more than what I talk about with Vlad. Oh, you're getting paid by SoFi then? Oh, okay, good. No, that's good. That's why they don't ever talk to me or interview or do anything. But they let me go to all Robinhood's events and talk very positively about them. Yeah, paid by. Yeah, no, exactly. I knew it was coming. The Bitmine bag holders are just buying way too heavily into a speculative name and then giving it zero time to perform. It's cryptocurrency. Ethereum could literally fall to 2,000. Okay, like I hope that doesn't happen, but I'm not buying it and saying, oh, you know what? I don't think this will ever dip down. Don't buy with leverage. Don't buy with options. Buy and hold for the long term. Zero has changed about the Ethereum play? Zero. Only good things have come of it. They're literally out here spending their last pennies after going zero DTE options on frickin' BMNR to buy bots to spam my chat. It's honestly hilarious. Okay. Payment companies are fine as long as we don't go into a recession. Yeah, I mean, I think that about I think that about the stock market. Stock market's fine unless we go into a recession. But even if we go into a recession, PayPal's going to, be fine on the other side, you know? Um, Tom Lee's still saying ETH to 14,000. Yeah, well, I don't know if he's saying to 14,000. I think it's 10 to 12,000 is what he said. But we'll see if he's right. And if he's wrong, that's going to be a hit to his reputation. You know? How do you think the recession will affect SoFi stock? Poorly. They've got a lot of personal loans and loans of different kinds that are out. And if a recession happens and people lose their job, they don't pay their loans back. If you guys have, there are recession fears every single year. I'm not a believer in a recession. If there is a recession, you buy quality companies and you hold them through bad times, but don't expect not to see losses and revenue hits and earnings hits. That happens. But you buy things that can withstand that. And PayPal's definitely going to withstand that. They take zero risk and they have a huge cash balance. You know? Okay, let's see. Dude, there's so many retailers that are as bad as Wall Streeters. No, I don't. I'm not calling out a certain demographic that's saying these types of things. Just got an alert on my phone that PayPal was up after hours. Not much, but here we go. That is not true. Well, I mean, it's not true that they're up in after hours, but they're up 0.3%. Please do an analysis on Nebius. I'm sure there will be a week where I cover Nebius on one of these fiscal Fridays, but I saw a historically low, like last 10-year low for PayPal on an EV to, what was it? Gross profit, EV to, there were a couple ones. I don't think free cash flow TTM was the cheapest we've seen it, but they're doing very well, man. Let's continue to take a look really quickly. Share-based compensation expense. So this is another thing. So whenever using, Fiscal AI, which is the tool that we're using here to show all of this off, we can take a look at a name like, I'm just going to lower the chat so you guys can actually see the full graph. Whenever we take a look at something like stock-based compensation, we can then also look at, compensation. Common size. Let me make this one bigger. So you can look at share-based compensation expense percent change, which will show you, how that compensation has grown year over year. And by the way, if you see this, these are all negative numbers. Compensation has been decreasing over the last couple of years. So quarter over quarter, they lowered it last year by 25%, and then this year by another 9.5% on Q3. So stock-based compensation expense is going down. And then if we go back to that, share-based compensation expense common size, that just essentially puts it on revenue in this case. So let's take away the percent change and look at what it is on revenue. So this used to be much higher. They used to pay out nearly 7% of revenue to stock-based compensation. Now, under brand new management, this is lowering and lowering and lowering. Now down to 3% of revenue, and the actual the overall number is decreasing. Okay, that's really great management. they're not taking big paychecks in order to feed themselves. They're making sure that the stock is turning around. I honestly think Alex Chris is a very young man, and he does not want to sort of do a get rich quick here. I think that he wants to sort of create a legacy for himself. This is his first time being a CEO. I think he wants to take this cruise ship that is PayPal and turn it around successfully. Um, Tanner, I know this is not investing advice, but it is crazy to start a position in PayPal. This doesn't make sense. And that's perfectly fine. It's at the end of the day, it's my money. I get to do what I want to do. I made money last time I bought PayPal. I think I'll do it again. I think that they're going to do great things, and I don't think that it's losing nearly as fast as you guys think. Everyone, so PayPal is going to turn into a bank. Everyone's making their own stable coins. I don't know what the piss in PayPal means, but the thing is that a lot of stable coins have tried. Very few have been successful. PayPal stablecoin is really proving to break out here. I don't know what they've been changing over the last couple months, but they've essentially tripled in the last 2 months for their stablecoin. If that continues, they could make up for a big, one of the largest stablecoins, really, versus many of the other ones. I don't know how to sort by categories, maybe. How do I sort via just stablecoins on here? I would like to see what the biggest stablecoins are. Let's see if I can find that. Because I bet you they have grown as a percentage. There's not many. Yeah, okay. That's what I thought. I knew it was on Coin Market Cap. I just couldn't find it. So stablecoin is now fifth largest stablecoin. And that's past global dollar. That's past a few of these here. There's quite a few. There's a lot that have tried. And there's actually multiple pages to this. But PayPal started, and people thought that they started late, and now they're fifth largest, and they've tripled in the last 2 months. They don't need to become a real bank to become a super app by offering direct deposit and offering rewards and different things like this. This is a swing trade for me. I feel comfortable and can sleep well with a name like PayPal just because how much they're buying back the stock. Like the shareholder yield alone will return a pretty good premium. Like if you were to compare their shareholder yield versus the S&P 500's yearly return, you're already getting 80% of the way there just from buybacks and dividends, let alone if they actually do turn around this ship, which I'm seeing from Venmo growth, from PSP growth. Like, I think people are really not understanding the turnaround on Braintree, and that the comps on PayPal are going to be really good because, Braintree has actually had a lot of negative growth over the last 3 quarters. So I think they do return to double-digit growth rates, and a lot of that will be increased EPS because of those buybacks, and outstanding shares will continue to come down, and I'm going to collect a premium and as a dividend. Like, yeah. 12 to 18 months or something shorter. Yeah, I mean, I'll hold it for 12 months. I think it'll be shorter than that, though. I honestly think I will see a return in the next 9 months. I think over the next 3 quarters, you're going to see that change in PSP and in Venmo, and a lot of their growth and NFC changes, but really the accumulation from funds that are objective focused for dividends. Surprised since you never seemed interested every time Roy brought it up. The reason why me and Roy are friends is because of PayPal. I was a PayPal shareholder for like 18 months or so, and then I ended up selling out of it for a profit. But I'm getting back in almost like 33% lower, you know? Um, I heard that PayPal is one of the best API platforms too. Most merchants like it. And also, I offer PayPal through futureinvesting.pro as well. And I would say probably 45, something like that, percent of purchases go through PayPal. I think consumers like it, especially whenever they're buying with people that they like, that's their first time paying. They're like, oh, I don't know if I'm going to receive anything at the end of this purchase. So in case I need a refund, I'm going to purchase with PayPal. And I'm perfectly happy paying a premium to PayPal because it increases the chance that there's a conversion rate. So it's a win-win. Will you interview Alex, Chris? I think there's a chance. I'm not here to sell you on PayPal. I'm not here to sell you on PayPal at all. I'm just honestly, these Fiscal Friday shows are much harder than I think because well, not harder. I just think that there's I'm bringing names constantly that are very contrarian. You know, I usually like to bring up these names, and I find names whenever they're most disliked, and look for those turnarounds. So, you know, every time I bring these, it's going to be like a struggle because every comment is going to be like, "No, f you, go away." But I think I'll be fine. Um, okay. I like the friends and family option on goods and services when buying stuff online to get insurance for a slight fee. Definitely secure transactions every time. Um, yeah, it just changes the way that they charge. Um, I'm disappointed in you. I followed you since the beginning, not selling on PayPal, but selling options. You didn't even know about options in the beginning. I don't even know what you're referring to in terms of you're disappointed in me not selling PayPal, not selling on PayPal. I did sell on PayPal. I just bought back in today. Um, my roommate and I use Venmo to send money to each other for bills and stuff. Super useful. I think that that's the interesting part, right? Is like it's just free to do that sort of stuff. But then if they start offering debit cards, well then, hey, like I think it's 85% of the money that gets transacted onto Venmo ends up leaving the platform within the first 10 days. If they can start giving out debit cards, which is being picked up quite quickly right now, then maybe you keep that money on the platform just a little bit longer. And that's very important. Um, No, I didn't even see this. Juan covers PayPal on X. I did not see an 8K filing. However, this is a great thing. If we go to Fiscal AI, they have, you know, you could see who the biggest owners in this company are and the amount of shares that they have, the complete industry and the companies that they compete with. So you see here Visa, MasterCard, Fiserv, Block, Adyen, Fidelity Investments, or what is it? Fidelity Industry Services. What's the name of the company? I could just check, but Fidelity National Information Services. I was close. Rocket Company and Toast. So you get great comps. You get to see their growth rates here. Their, all sorts of stuff. And I can even add on new things if I'd rather look at like new metrics. I can just add on, what would gross profit be versus all of these businesses, or take off, forward P if I don't like that metric. So it's kind of great to compare against all of their, competitors. But filings is here as well. So Juan said to check out the 8K, which I have not read and do not know what I'm looking for, but let's see. On November 14th, PayPal established a commercial paper program pursuant to which, let's see here. Notes outstanding under the program at any time not to exceed $5 billion. Unless the amount is increased in terms of which the dealer agreement, the notes will be sold under customary market terms. Okay, wait. Establish a commercial paper program pursuant in which they would issue short-term unsecured. So what? They're raising debt? This isn't debt for a buyback, is it? Is that what you were suggesting? The dealer agreement provides the terms under the dealer will either purchase for the company or arrange for the sale by the company of the notes. The dealer agreement contains customary representation warrants. Okay. Let's see if this AI summary tells me anything about this. I have not tried this for filings. We'll see. PayPal established a commercial paper program enabling the issuance of short-term unsecured commercial paper notes. The program allows the company to borrow, repay, and reborrow funds with the aggregate principal outstanding amount exceeding $5 billion. Unless increased per the terms of the dealer agreement, the note will be sold under customary market terms, where the maturity not exceeding 397 days from the issuance date. But they don't say what the need of the thing is, right? Avenues for flexible short-term financing to support general corporate purposes. That doesn't say. Well, the notes have been issued. The program establishment signifies a strategic move to enhance liquidity management and diversify funding sources. Yeah, I mean, it just seems. What am I missing in there? It looks like other companies use the commercial paper for buybacks too. I'm not sure. I'm not sure. It's definitely 8Ks are not my specialty. I mean, that's for sure. Is Nebius a long-term position for you? I think it's too early to tell. I think that's too early. Okay. Wow, the PayPal hate is actually crazy. I think that this name is going to be perfectly fine. And you guys should look up some of their statistics and new products that they're working on. I mean, where was it? There's been some cool things that they've been working on. Like, what is going to happen whenever they start offering 5% cash back? You don't think that's going to be picked up by the personal finance communities and everything gets shared around, and like PayPal could have a big comeback? I absolutely think that could be true. I would use PayPal if they offered me a better service than what I'm getting now. If I can get like here in Canada, my credit card gives me 2% cash back. If then PayPal on top of that gives me 1% cash back, why would I not use PayPal to get 3% cash back whenever I'm purchasing? It makes no sense not to do that. And I think many people will think that. Um, Thoughts on if we don't get a cut? Nothing. It doesn't change my strategy at all. Um, I think it's just the fact that no matter what PayPal does, it's just dead money for years. So many people think that that's going to continue. Yeah, I mean, there's been a lot of volatility. It hasn't just been a straight downward path. Like I made money last time I bought it, and you even see like last earnings, we ended up seeing like a 14 or 16% pop on earnings. They could, you know, next quarter we're going to see 2026 guidance as well. That could be a big change for the way that people look at the company. They say they're doing a lot of very interesting things in 2026, and a lot of the times their guidance doesn't even include any new products or changes that they're going to put out. So I think that'll be very important next quarter. But like from the times of July to December, we ended up going from 60, sometimes high $50 ranges to then 90, back down to high 50s, back up to mid to high 70s, then back down. Like we are seeing volatility. It's not a stagnant name. But yeah. I don't care about the bag holders that bought at all time high. I don't care what I'm worried about my entry price. And this is historically the cheapest the stock has ever been from an EV perspective. That's enough for me. I've held 50K in PayPal for 2.5 years. It's been dead money in the portfolio, some ups, some downs, but no major moves. Yeah, but if you're not a believer in PayPal, then you should be selling it. Like I talked about this yesterday. If for example, I'll answer this after, but it's pretty good. If, for example, you have more faith going forward in Google, Amazon, whatever, the money that you're potentially down on PayPal is not worth it if you don't think that the recovery is going to happen. If you just think it's quote unquote dead money. So, but I'm not really a believer in that type of thought process. I'm looking at companies fundamentally. The markets will do whatever it wants. I honestly feel like in these types of red markets, this is where I'm best. Like, if you guys look back, and a lot of people are new here. I mean, like, I didn't gain many subscribers during the times whenever SoFi was down at $4 to $6 ranges. But that's where I think my advice was best. Not while it was climbing from 6 to 30. That part was easy. It's the not selling that's the good part. It's the doubling down whenever everyone else has lost faith in these certain names, and fundamentally they're still doing well. Now, PayPal is not having the fundamental success of, let's say, I don't know what an appropriate name would be, like a Google or an Amazon or something like this, but you're also not paying that same multiple. You're not paying nearly the same price. You're not getting the instant shareholder yield of the buybacks and the dividends that take away the stress of trying to find that initial 11% return. And I don't care about sexy. As for what is for dinner, as that one person asked. Narrative. What's for dinner? Chicken jambalaya. Little basmati rice. Send me to the moon. There doesn't need to be a story. Not everything needs to be a story stock. And sometimes, especially in markets like right now, like what we're going through, Story stocks are not what's working. Story stocks are what's selling off. You know what's working right now is uh defensives and stuff like that. And PayPal is a defensive name. Okay. Um, I thought the story was that Apple Pay was going to kill PayPal, and that hasn't happened. It's true. PayPal continues to grow. Um, yeah. Um, my portfolio been going up during this red market. It hasn't been the same for me. It's definitely been red over the last little bit, but it comes with the territory. That's what happens. That's just what happens. Um, what's your view on BMNR? Same as always. I've got nothing against BMNR. I like buying the company. I think that they'll do well over time. Um, I think that a lot of the finance space is going to be built on Ethereum, but I think PayPal is going to be involved in that. Like, I think that's also why they're going after things like debit cards and like direct deposit and all of these sort of things. Um, I think people are giving absolutely zero credit to agentic commerce because it hasn't happened yet. But PayPal's very well positioned for an AI future where bots are making a lot of purchases and they could be as micro as a fractional penny or even more to large purchases for wholesale businesses over time. Like PayPal's placing itself very well in that space. Um, have you tried your luck in day trading? Not since I was a kid. Day trading is not a thing. Like I don't believe people make money in that space. Um, it seems like a lot of change needs to happen for crypto to adapt to quantum changes over the next 5 to 10 years. Nah, I don't think so. Not quite on the quantum train right now. Um, Day trading is simple. Just buy low and sell high. Evan, what's up, brother? How you doing? He doesn't text me back, but he has time to watch the show. I'm kidding. Okay. PayPal needs to put up 10% revenue growth. Otherwise, no pumps will be sustained. All momentum dies just like last earnings bounce in the morning. Yeah. Unfortunately, Curtis, I don't believe you. Um, I think that like, it might not have a premium right now, but value investors will literally look to scoop up the entire business if it goes cheaper. Companies cannot stay down forever. It doesn't work that way. So if Warren Buffett sees an opportunity in PayPal to buy the entire business, there will be a you know investors to take this company private if it gets so cheap. Um, but I do think that we get to double-digit growth, by the way. I still do. They can go to zero. Not with a growing business, they can't. The company is accelerating growth right now. EPS is the highest they've ever put up. Where is this go to zero? There is a story to be told on payments that people think is happening. And then there's what is actually happening. If, what's the name of the company? If Western Union still has a business going, then PayPal will still be alive. Plus, PayPal has like $8 billion in cash. It's true. Yeah, we covered Warren Buffett buying Google. Freaking amazing. Wealth. I've been looking into Zeta. I'm not anti-Zeta. Companies won't stay down forever. It's not true. I mean, you can look at long term on businesses. Companies do trade to their fundamentals. Have you gotten a DM back from Tom Lee? No, no. Do I like Reddit? Yes, but that name is a story stock. Like, 85%, or what was it last quarter? 85% growth on advertising revenue. I could be wrong. Maybe that was last quarter. Let's see. We can just go back to Fiscal AI and check. If we go to segment and KPIs and go to advertising revenue, we'll switch this to quarterly and then go to, that was last quarter. We saw 83.6%. This quarter, 74.4%. Year over year. Absolutely insane. Newly public, so we don't have a ton of data on this name, but yeah. Yeah, that's a great way to put it. Companies don't go out of business based on narratives. That's true. How much of your portfolio do you have on PayPal? Like 0.1%. I just bought today. Like I said, I just bought a nice or like a little teaser position just today. Just as the market was closing. I think it was like 3:30 or something. But it's the cheapest that it's ever been. Well, it's a teaser right now. If it continues to fall and I see some opportunity that it turns, like, that's how I always build out my positions. Like, I'm not going and taking 20% of my portfolio and like that, dude. People don't realize. I talk about SoFi all the time. It's like, well, it's grown a lot, but like it's like 12% of my portfolio. Like, there's only 100% of someone's portfolio. So every single day that I come back and I say, I've got 20% in Shopify, I've got 45 or so percent in Nvidia, and I've got 12% in SoFi. Where do you think the rest is? I've got like 15 other names, 16 now. So I say the other day, like, oh, I trimmed Nvidia to buy Nebius. And people go, you trimmed Nvidia? No. It's like, I have no cash and I've got a position that's more than twice as large as my next biggest position. Where do you think I'm finding money to buy in all these other names? Yeah, most of the accumulation of the portfolio is from gains. But yeah. Um, looks like you guys will talk PayPal today on the FinTech Friday. I mean, maybe, maybe. Um, we should talk about some sponsors for the channel. No more sponsors. I've got it. I've got a sponsor. I'm happy. Uh, yes, I do actively put money into my portfolio, but um, and I'm not like saying this to be weird about it, but it doesn't like that doesn't actively change the size of the. I'm not making nearly as much as how big my portfolio is. You know, I'm living based on my portfolio. So yeah. Um no, I don't have any other side hustles. It's just YouTube and investing. Um SoFi is 100% of my portfolio. When it works out, that works out. But if there's some volatility, it is nice to have some diversification. And then whenever you do want to make rotations into other names, it's nice to be able to trim the names that are, that you potentially don't have as much conviction in, and then buy whatever you think is nice. Um, I don't follow the healthcare names. I don't follow HIMS. I said I was interested in the labs product, but it's not coming to Canada. I do not have a paid off house. I'll keep this mortgage as long as I possibly can. Um, I hope everyone in this chat is making more than 3% in their portfolio today. That's how much my interest rate is on this uh house. So why would I ever pay it down? Ever. Um I just pay my monthly bills and that's it. Um yeah. I mean, if I'm on the same camp as Matt Money, I know I'm in the right place. Nice interest rate. Thank you. I was working for the institution that gave me the mortgage at the time. 3% per month? What do you think? What do you think? I'm talking about a mortgage interest rate. You think I'm paying 3% per month? Um, I when did I quit a year later. 1 year later. Um TD or RBC. I mean, you can check my LinkedIn. It wasn't I didn't work for a bank, but I was in private equity for a financial institution that was not a bank. Did I say private equity? I meant to say private wealth. I did not work in private equity. I do like estate planning and stuff like this. It was not private equity. Um, let's see. People who don't like paying down their mortgages faster. Uh, People who don't like paying down mortgages faster, but are so against responsibly using margin confuse me. Um, I mean, one cannot be called away from me if the market goes down. Um, you know, I don't know. And there might be a way to responsibly use margin. I'm not like against it for everyone, but I think that one is much more risky than the other. You're talking about a 30-year mortgage versus something that's tied to, PayPal and BM&R stock. Google's up 3.37%. Love it. Why'd you leave that job? It wasn't fun. I didn't like talking about like fixed income and insurance and all these things whenever I could talk about like at the time I was like heavily investing in like Tesla and Nvidia and stuff like this. And then I couldn't talk about any of those products because the average age of my client was over 63 years old. So um okay. Uh, he saw he could entertain me for an hour or more per day and said, I'd rather do that. I definitely like doing this. This is awesome. Um, how old are you? I'm 28 now. Um, if you consider homeowning's the same debt as all other debt, then anyone who what the heck is that? Am I reading that wrong? If you consider homeowning the same debt as all other debt, then anyone who has any living expense is in debt. Okay. Tom Lee did not message me. No. Um, I don't. I only sell options. Uh, so in this type of environment, I think I only had Nvidia out at the time, and they're doing very well in this red market selling calls. Yes, I did see that. It's pretty exciting. I just am super excited that maybe the biggest and most popular person in finance is now going to be talking about this company more often. Yeah, I'm selling covered calls. So allowing people to purchase my stocks from me if they hit a certain, like a higher price by a certain date. And if that date comes to pass and it doesn't reach that price, then I get to keep the money that they paid me for that option for that contract. And if it does come to fruition, then they have the opportunity to buy that stock from me at that given price, regardless of where the price is on the stock. So, to give an example of that, if I say, hey, you know what, I'll sell you SoFi stock for $35 by the end of November, I want money up front today. If it ends up getting to $40 by the end of November, then they only have to pay me 35 per share. I still get paid for selling the stock. I still get paid for the premium, but I lose my shares. If it doesn't get to 35, then I still get the premium. I still get to keep my shares. Life goes on, and you've, uh, are creating a dividend for yourself. I surprisingly was not anti the 50-year mortgage. I could, you know, however, a couple people have ran the numbers on it, and it's not impacting the monthly cost nearly as much as I thought it would. So if it's only taking it down by a few percentage points, but it's increasing your interest rate or the interest paid total on the mortgage by like massive amounts, yeah, I would not do that. Um, yeah, I was in finance for 5.5 years. Um, so yeah, I think I started when I was 21, something like that. Um, make an example for Nvidia. Well, I did make an example out of SoFi, but Yeah, it could be like you can go and look at the options chains pretty easily and just see what the going rates are, and then depending on the brokerage, how much they charge per contract. Robinhood being maybe not one of the cheapest, but very cheap, while being probably the most popular. Um, Tanner, what did you think about Tom Lee's closing bell message? I don't know if I saw this. What did he say? Let's see. Is this something that he tweeted out? Okay, let's have a listen to this, because I didn't or I didn't see this. Wait, let's see if I can get this even. I don't even know if I'll be able to watch this. Okay. Um no, I can't even go back that far on CNBC. It only lets me go back 2 hours. Is there a video of it up on YouTube or something? Cuz um let's see. What are your favorite stocks to write puts on? Well, I'm not doing any cash secured puts right now, just because I don't have any cash. But yeah, it would be ones that I would have like um, a lot of volatility, so then I would actually have a premium that I could collect, like a BMNR or an Nvidia or something like this. There's clips on X. Okay. Um, Tom Lee. Okay, this must be it. Okay. I only have the 45-second clip, so if there's a bigger one, let me know.
Never fun to see markets wobble, and then stocks that are quite popular like AI and the quantums and nuclear come down so hard. But it is consistent with the idea that we were up 6 months through October, so the market's overbought. We expected 2 weeks of consolidation, which is what we're getting. And then, of course, as you know, there's hawkish Fed talk, so there's a bit of a tantrum the market's having. But between now and year end, we still have really good seasonals. The earnings have been good. Sentiment has flipped negative, Scott, as you could tell. I mean, the AAI went to negative 17.5. So I'd say the risk reward is still really good for equities into year end. And yeah, I think the S&P will be over 7,000 by the end of the year. In fact, maybe over 7,000 by the end of the month. Never fun to see.
I mean, we'll have to see. Obviously, he's called for a few price predictions already that have not been the best over the last little bit. But I also do think, and am of the impression that like markets can turn around pretty quickly, and some people just look at the trend and think that we're going to continue in that trend and not see any sort of potential turnaround. I'm not a believer in that. Like, I really do think that things can turn around very quickly. Yeah. Gotta love the green tie. That's funny. Um, PayPal has also partnered with XAI for agentic. Diego Scotti talked about it the other day. Oh, that's exciting. Yeah, all right. I wish that they put a press out, or maybe they will if it furthers along. But yeah, a little while or a little early. If they could do that for like the um, XAI for sure, which is also interesting because like X has literally wanted to get into the payment space and just hasn't, and people thought that that would kill PayPal, and it's just been a longer ride than people thought. But yeah. Okay, ladies and gentlemen, thanks for viewing the PayPal show. I'm going to be back at 10 p.m. with the rest of the crew to talk about SoFi, PayPal, Robinhood, maybe Shift4, stuff like that. Just all the fintech names for the FinTech Friday show that happens every single week at 10 p.m. Stephen Fiorillo as well. Thank you all so much for watching. Really do appreciate your time, and bye for now.